Hello. The company being analyzed today is Taj GVK Hotels and Resorts Limited. This is a hotel company, and today we're going to analyze the company's financials, what it actually does, and its future growth plans. It seems the company is adding a new hotel. So let us start the analysis. First, we have a market cap of 2,237 crores, so mid cap company ish. Current price of one share is 357 rupees. The price to earnings ratio based on last 12 months earnings is 18.3 times. Return on capital employed, return on equity as calculated by screener.com. Return on capital employed 20.8% is nice. Return on equity 16.2%, good, I guess. Book value, that is assets minus liabilities, is the book value. So book value per share is 108 rupees compared to share price of 357. Now we have the financials of the company all the way from fiscal year 2021 to fiscal year 2025. And all of these are in crores, as you can see on my right. So in fiscal year 21, we have sales of 96 crores and a profit before tax and a profit after tax in the negative. It is COVID. So 926 crores of losses in fiscal year 21. It's COVID. Then comes a COVID rebound. Revenues reached 228 crores, then 412 crores. But in fiscal year 24, revenues declined to 410 crores. Okay, profit after tax declines to 74 crores. And finally, in fiscal year 25, 461 crores of sales and 94.85 crores of what? 94.85 crores of profit after tax. Look at this. Debt to equity ratio. Lower this, the better. It was 0.46 times in fiscal year 2021, then 0.43 times, then 0.21 times, then 0.12 times. So debt to equity has shown very much improvement, a lot of improvement. That is a very good thing. It has now reached zero because borrowings have reached zero in fiscal year 2025. They went from 178 crores to then 66 crores in fiscal year 24, 0 crores of long term, I guess, borrowings in fiscal year 25. So, massive reduction in the company's borrowings. And book value per share has reached 100.04 rupees from 86.50 rupees. So, book value is also growing. Now, in fiscal year 25, we covered the revenue. Okay, where is the revenue coming from? So, it seems that room revenue, food, restaurants, and banquets. So rooms are giving revenue, food is giving revenue, restaurants and banquets are giving revenue of how much? These are in lakhs. So 435.9 crores is coming from here. Okay, the biggest revenue. Again, these are in lakhs. These are in lakhs actually. Then we got shop rentals, all right, 5.5 crores. Other operating revenue. So this is also operating revenue, 7.49 crores. 66 lakhs coming from membership fees. And if we divide it further, you can see room, okay, revenue based on product and service. Okay, room revenue, the room revenue is 247 crores. Okay, it's 24,708.34 lakhs. We are converting into revenue by adding a couple of decimal points. So 247 crores in fiscal year 25 room revenue. Restaurants gave 79.86 crores, and banquets gave 109 crores. So these are the big three. Okay. This is the big three. But room revenue is the big me. Okay. So room revenue is the biggest. Okay. Room revenue is the biggest, followed by banquet revenue because they have a banquet hall and all of that. The hotels have a banquet hall, and then comes restaurant revenue. So these are the three important sources. As you can see, room revenue saw the largest increase. Fiscal year 24, 217 crores, then 247 crores compared to banquet and restaurant revenue. Okay. Then look at this revenue based on timing of revenue recognition. So product and services transferred at a point in time. So I guess at a very near point, almost when the product and the service was performed, then how much revenue was received at the point. Okay, majority. And then product and services transferred over time, a little. Even I'm confused by this classification. I thought this was that basically this one they receive the payments very much on time, that at the point of sale itself, product services they get the payment after some time. I thought of this. Maybe I'm wrong. Here we have the cash flows of the company. Okay, pay attention to cash from operating activity. Thankfully, these numbers are in crores, and you can see in the hotel industry, many companies are cash flow positive because customers pay as they use the room. Sometimes they even pay before taking the room. So you can see mostly cash flow positive in fiscal year 25, 116 crores. So cash flows seem to be at least on the uptrend. Okay, they are big and they're positive and they seem to be on the uptrend. Now, what is the company? What does Taj GVK actually do? So this is from the credit report. Okay, so the credit report for the company released by some credit rating agency. So it's a prominent player in Hyderabad. Taj GVK is a medium scale player in the Indian hotel industry with 961 keys. So first of all, it's a player in Hyderabad. Hyderabad is its location. Then 961 keys, 961 rooms, medium scale player. It has a strong foothold in the Hyderabad's premium hotel market, premium, with three properties having 592 keys, all located in Hyderabad Central Business District. It holds about 8% of the total supply in the Hyderabad micro market and commanded a high revenue per available room premium compared to other properties in the vicinity. So, strong presence in Hyderabad premium. It has 8% of the total supply in Hyderabad's micro market, and it commands a higher revenue per available room compared to other properties. So, compared to other properties, it has a higher pricing and it's able to maintain that pricing. It has a good market share. And in Hyderabad alone, 592 keys. So, important info, total rooms are 961. In Hyderabad premium market, they have three properties, 592 keys. Okay. Then higher revenue per average room, available room. That's a good thing. That's a good thing. Now, of Taj GVK's five hotel properties. It has five hotel properties. Three are in Hyderabad, accounting for 62% of its total inventory. So Hyderabad is the big one. Hyderabad market contributed 70% of its revenue in fiscal year 25, 69% in 2024, 67% in 2023. Taj Krishna, the name, is largest among the three, contributing 54% of Taj GVK's revenue in fiscal year 25. So Taj Krishna is the biggest of its Hyderabad properties. Hyderabad is a very important market, contributing 70% of the revenue. And this alone, Taj Krishna contributes 54% of total revenues in fiscal year 25. There's two more properties, one in Chennai and Chandigarh. So three properties in Hyderabad, one property in Chennai, one property in Chandigarh. They're also well established and contribute around 30% to Taj GVK's revenue. Okay, so Hyderabad, main one. Okay, Hyderabad is the big thing. Then two other areas, Chennai and Chandigarh, 30%, 62%. How much? Yeah, 70% from Hyderabad, 30% from the other two. Taj Krishna is the big one, contributing almost more than half of its total revenue, and five hotels in total, 961 rooms. 961 rooms. So, Taj GVK Hotels and Resorts Limited is a joint venture formed through a strategic alliance between Hyderabad based GVK Group and the Indian Hotels Company Limited in the year 1999. Joint venture time starting 1999, two groups GVK and we got IHCL. IHCL Tata Enterprise and GVK is a Hyderabad based group. The company owns and operates three five-star hotels in Hyderabad, one five-star hotel each in the cities of Chennai, Chandigarh, and one five-star luxury hotel at Mumbai through a joint venture company. So five hotels, three Hyderabad, one this, and one another one, a new other one which is a joint venture. So it's classified as different. So five of its own hotels, one joint venture. This is the one five-star luxury hotel at Mumbai through a joint venture company, Greenwoods Palaces and Resorts Private Limited. So through its own JV company, joint venture company. Then Taj Krishna. Taj Krishna is the flagship one, 260 room inventory. It is located in Hyderabad. Okay, 260 rooms. Then Taj Deccan has 151 rooms and it's located in Hyderabad, also located in Hyderabad. So see the rooms, okay, see the number of rooms. This is where the money is coming from. Mostly, of course, banquet is also there. Then another Hyderabad, Vivanta Begum Peck, 181 rooms. Taj Chandigarh, 149 rooms. Okay, so 149 rooms. Total are 961. That's a good thing. Taj Clubhouse, Chennai, 222 rooms. And Taj Santa Cruz, the Mumbai one, I guess this is the, what do you say, the joint venture, 279 rooms, a lot of rooms. Okay, and finally, the company is adding a new hotel. This is, I believe, again from its own credit report, credit report from a credit agency about TajGVK. So it's entering into the Bangalore market. It's already in the Bangalore market. Okay, so TajGVK is geographically expanding its operations by entering the Bangalore market. Okay, sorry, not Bangalore, Chandigarh, and what was the other place? There was Chandigarh and there was another place. I forgot the other place. Mumbai, of course, yes. There was Chandigarh, Haryana. There was another location. So it's entering into the Bangalore market. Okay. The company is developing a hotel in Yelahanka, Bangalore. The construction cost of the hotel would be 3,269 million rupees or 326 crores, for which it has received a sanction, meaning an allowance, meaning it can get a loan now. It can get a loan now of 2,000 million rupees or 200 crores of term loan. So it has gotten a sanction for 200 crores term loan. Total construction is 326 crores. So the funding will be done through debt plus its cash flows. We saw that it was generating positive cash flows. The construction is at an advanced stage, with majority of the construction incurred till date being funded through internal accruals. All right, so construction is already being started. It's an advanced stage. Majority of the construction is being funded through internal accruals, so internal money, its own money, and it has still received a sanction of 200 crores. So it Okay. All right. So at least a mix is being used. Not all debt is being used. The hotel would have 255 keys, 255 rooms, and the management expects the hotel to be operational by early fiscal year 2027. We are currently in end of fiscal year 26. Fiscal year 26 will end in around where? Yeah, in March 31st. I hope it has March 31st days. So March 31st, fiscal year 2026 will end. By early fiscal year 27, this new hotel in Bangalore, 255 rooms, okay, 326 crore hotel they're going to make now. It's about to be operational at that time. And yes, Chennai was the market. Yes, Chennai. Two more properties, one in Chennai, Chandigarh. So 961 keys, it is adding another 255. That's a good growth rate. Yeah, that's like I think like 20% growth, 20% growth in rooms. 20%, yeah, around 20% growth in rooms. So that was Taj GVK hotels. So what can we say? Low debt. Okay, no debt. So now it's taking another loan. Maybe it paid off the loan because, of course, first of all, it could pay off the loan. It seems it was now very profitable. Okay, 94.85 crores in profits. Look at this, 461 crores of revenue, 94.85 crores of profits. We can actually use the calculator. That gives us a net profit margin of 20%. That's a good net profit margin. Debt has reduced a lot, so it's finally been able to take a loan as to the size of 200 crores. Again, they have gotten a loan sanction, so mean I guess the bank is not said they will give the loan. It's a sanction, I guess. Cash flow positive, that's a good thing. Balance sheet will now be, I guess, better because of the loan already gone. Five hotels plus one joint venture, and Hyderabad is very important for them. Taj Krishna alone is contributing 54% of its total revenues, according to the credit report. As we saw from here, room revenues is very important, of course, but banquets and restaurants are substantial. Money made from the restaurant in the hotel and the banquet hall in the banquet in the hotel. That was Taj GVK. Let's see how the company does in the future. Bye.